Hi everyone, it's Antonia from Abacus Jack. I hope you're all doing well. Today we're going to be talking about something that's going to affect millions of people in the UK from next year. It's called Making Tax Digital for Self-Assessment, or also known as MTD ITSA. If you're self-employed or a landlord or you run a small business, then this one is definitely for you. We're going to break down today what Making Tax Digital actually means, who has to follow the rules, the key dates that you need to know, how filing will work under MTD, and what you should be doing now to get ready. Let's jump straight in. Making Tax Digital is the government's big plan to move tax reporting online. Not just the final tax return, but the whole process. At the minute, HMRC have some super outdated old systems that don't connect together, and MTD for ITSA is refreshing the whole lot. At the moment, if you're self-employed or you're a landlord, you send one self-assessment tax return every January. And under MTD, that's going to change. Here's what MTD means in plain English. You'll need to keep digital records using software, not paper or spreadsheets. You'll send quarterly updates to HMRC, and that's every 3 months. At the end of the year, you'll send a final declaration instead of the traditional tax return. So basically, more frequent reporting, all done digitally using approved software. It's not meant to make your life harder, it's supposed to make things more accurate and reduce last-minute panic. But it is a big change, which is why it's good to understand it early. Let's talk about who MTD actually applies to. From the rollout dates, MTD will cover self-employed individuals, landlords who earn rental income, people who have both self-employment and property income. But here's the important bit. It only applies if your total income from these sources is over £50,000 per year. If you earn under that, you don't join MTD yet, but you likely will in the future. If you run a limited company, that's different. You're not included at this stage. And if you're in a partnership, you're still not included yet either. So the main group for now is self-employed people and landlords making over £50,000 a year. Now, the bit everyone wants, the dates. So here's the timeline as it stands. From April 2026, MTD becomes mandatory for individuals with income over £50,000. Then the year after, April 2027, it becomes mandatory for those earning between £30,000 and £50,000. HMRC have said that partnerships will follow, but we don't have a date on that yet. So for most people watching, if you're earning £50,000 from self-employment or property, you're in MTD from April next year, April 2026. If you're between 30 and 50k, you join the year after in April 2027. And remember, these are confirmed rollout dates as of now. They have changed before, and if they change again, we'll keep you updated. But it looks like April 2026 is locked in. It's going ahead. There's no getting out of it. So, how do you actually file under MTD? Let's break it down simply. First, you have digital records. You'll keep your business and rental records using approved software, something like Xero, FreeAgent, or QuickBooks. Spreadsheets might still work if they link to like a specific piece of bridging software, but in my opinion, using a system like I listed before is the easiest way to do it. Secondly, you have 2 quarterly updates instead of 1 annual return. Every 3 months, you'll send a small summary of your income and expenses to HMRC. This is like a little P&L report. There's no balance sheet on it. And these quarterly updates don't calculate your final tax. They're just snapshots to HMRC. After the tax year ends, you'll finalise each business or rental total, similar to what your accounts do now. This is using the end of period statement. So after you've submitted your first 3 quarters, you'll have your 4th quarter, which is the final declaration. This replaces the self-assessment tax return. Think of it as like the final sign-off where all your income adjustments and allowances are confirmed. So you don't have to do a self-assessment return and MTD for ITSA. Once you switch onto the new system, the old self-assessment system goes for you. Doesn't happen anymore. You don't have to do that again. And that's it. Instead of having one big tax return at the end of the year, you'll have a steady flow of smaller quarterly submissions and then one final declaration. Now let's talk about the most important part, which is how can you make this easier for you now? So you can start making your bookkeeping digital now if you're not already. If you're still using paper, spreadsheets, or a shoebox of receipts, it's time to switch. Cloud accounting is sometimes free to get and just keeps it so much simpler with the tools that they've got available to you now. Secondly, make sure you have a business bank account for your trade that is separate to your personal account. If you're not doing this already, then this is a great opportunity to switch. Get a dedicated business bank account so it keeps your records cleaner and makes digital bookkeeping much easier. And then we don't have to look at all your personal expenses either. Then have a tally up of your income so far for the year. Work out, does your income put you in the April 2026 group? Are you going to be affected by MTD for ITSA? Or can you get someone to help you do that now? If you're over 50k, then prepare for 2026. And if you're not and you're on over 30k, then just have an awareness that it's coming the year after. And talk to your accountant early. Whether that's us at Abacus Jack or someone else, getting ahead now prevents stress later. We can help you choose software, set everything up with you, and make sure you're compliant before the deadlines hit, giving you more time to practice. We can help you choose software and set everything up and make sure you're compliant before the deadlines hit. And finally, start practicing quarterly bookkeeping now. Even if it's not mandatory yet, you can get into the habit. Doing it weekly or monthly bookkeeping, then that'll make MTD feel like a really manageable shift instead of like this big scary change that you're going to have to do. Thanks so much for watching today. I hope that helped making tax digital a bit clearer for you. If you found this useful, give the video a like, subscribe and pop any questions you might have in the comments. We're always here to make your finances easier. One plain English video at a time. See you in the next one.